I now hand the conference over to Mr. Dhruv Jain of Ambit Capital. Thank you, and over to you, sir.
Thanks, Aman. Good afternoon, everyone. Welcome to TTK Prestige's Q3FY21 conference call. We have with us the management of TTK Prestige, represented by Mr. Jagannathan, the chairman, Mr. Chandru Kalro, the director, Mr. Shankaran, the whole-time director, and Mr. Saranyan, the CFO. Thank you, and over to you, sir, for your opening remarks.
Good afternoon, everybody, and thank you for being here. We've had an excellent quarter, our best quarter actually ever. We've reported all-time high sales and all-time high bottom line for any quarter ever. We had expected Q3 to be good, as we told you all earlier as well, because we had expected all channels to be active only from this quarter, and luckily the festival sales were excellent for our category of products. And we're seeing good traction for the brand. The brand has made good strides in markets where we wanted to make good strides. We've not done any drastic reduction in any of our normal expenditure, and this bottom line is clean after all that, because we've decided to keep our advertising in full blow. Our new products are doing extremely well, and we're looking good for the future. Over for any questions. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question at this time, they may please press star and 1. The first question is from the line of Sameer Gupta from IIFL Securities. Please go ahead.
Hi, good evening. Thank you for taking my question, and congratulations on a very good set of numbers. Sir, 2 questions from my side. One is that there is steep inflation in almost all commodities, steel, aluminium, even crude prices have now started to move up, and there is also a disruption from Chinese imports. So in all this context, how do you look at your gross margins and EBITDA margin in tandem? So I know you have clocked around 14% this quarter, which is actually very good, 17% this quarter, but for a sustainable basis, what kind of EBITDA margin are you targeting, and should there be a very steep inflation in commodities, how do you plan to manage that? That is my first question, sir.
Well, we pass on all cost increases. So if there's any inflation in steel, aluminium, crude oil, whatever you said, we pass them on. The EBITDA margin depends upon what top line growth is. If the top line growth is good, you will have an enhanced EBITDA margin. If it is poor, you will have a lower EBITDA margin. But the gross margin will remain intact.
Just a clarification, sir. So let's say the aluminium prices are up 50%. You can't really pass on 50% price increases, right? Probably absolute amount we may still be able to pass on, and gross margin to that extent will see a contraction. Is that understanding correct?
No, that understanding is wrong.
Okay.
If margin cost goes up by 50%, we pass on that and the margin on that.
Got it, sir. Agreed. Okay, that's very clear. Secondly, sir, looking at our working capital, 75 days of inventory, 50 days of receivables, just trying to understand, is this part of our business model and things will not change, or is there a plan to reduce this business mix, any lever sort of, which will result in lower working capital going forward?
In my view, this is probably the lowest.
Okay, got it, sir. That's all from me, sir. I'll come back in the queue if I have more.
Thank you.
Hello, by the way, your numbers on the working capital are wrong.
Because our receivable days has come down, because there is a third quarter number with you. Maybe talking about second quarter number. Third quarter numbers are far better.
Sir, I'm looking at FY20. Sorry.
Okay.
Thank you.
Okay, that is not comparable at this point.
Yeah.
Thank you. The next question is from the line of Achal Lohade from JM Financial. Please go ahead.
Yeah, thank you for the opportunity, sir, and congratulations for the great performance. My first question is, you kind of highlighted that in the press release with respect to supply disruption. So, if you could talk about which particular categories did you face the supply chain, where are we in terms of normalization? And B, is in terms of the, supply disruption for the peers. And if, what is the extent of revenue loss or lost sales according to us because of the supply disruption for us?
Chandru?
Yeah. So, you know that we took a unilateral decision to stop Chinese imports of finished goods way back in May of this financial year. And we've been working very hard to move those supply chains into India, and we've been successful in doing a lot of it, in fact. But we would have still lost some sales because some products could not be tooled up fresh on time. So my estimate is that the Chinese products that we couldn't move enough to India in terms of supply chain, we would have lost about 20 to 30 crores in turnover for the quarter. And the other supply chain disruptions were not really disruptions because in the Q3 we had good supply chain, but the problem was the accumulated deficits of the Q1 and Q2, which meant that we did not have a surge stock available for this kind of a surge demand, which is what caused the problem. We will have no such problems in the quarters going forward. The Chinese imports that have come in here, even those models, largely by the end of Q4 of this year, we would have stabilized on most of those products.
Understood. And if you could talk about, in terms of the growth in the e-commerce segment, what is the growth YY and the mix for us for third quarter FY21, sir?
See, you must remember that e-com has grown at a healthy clip of 50 to 60% even in Q3. But clearly we could have grown even more had we supplied more to the e-com channel. But we did not want to do it at the expense of the other channels which were just limping back to normalcy. And hence we played a more equitable role in making sure all channels were fed.
Understood. And what is the mix, sir, for the third quarter out of the total revenue?
E-com came to around 16%, which was very much higher in the other two quarters at the beginning of the year. And it could have been better as I said, but it could have been at the expense of other channels which we didn't want.
Fair point. And just last question, sir. Given our 24% growth in the domestic market, what is the underlying industry growth? I know it is hard to say, but is there a pent-up demand angle? Is there a one-time buying which is played out? What I'm trying to look at is more of a medium-term growth. How do we look at this growth in the cookware and the appliances segment, sir?
You see, they told us that Q2 results were good, and everybody said it's pent-up demand. Then Q3 is also good, and you can't keep on having pent-up demand for 25 years.
I take your point. Demand. Yeah. But, if I have to just see the industry growth, what is the growth one should look at and, in terms of cookware and appliances in general?
See, you are looking at a situation of a double-digit growth in most categories as we speak. But however, if you look at the next few quarters, it's all warped because last year we did not have a full quarter because of the lockdown. So it's not strictly comparable. You will have a much better growth on that because you will not have a disrupted March. Similarly, in the Q1 of the next financial year, you have a disturbed Q1 of this financial year, so growth is not comparable. Only after that will we be able to say whether growth is comparable or not. Currently, I don't think we should bother about it. There is good demand, even though we are seeing even the month of January, we've had a good demand. So therefore, I think we should say that the market is doing well. And it is going towards good brands.
So, and after this budget, which is a very growth-oriented budget, I believe that the market will grow.
So is it fair, like earlier I remember, sir, you talking about, cookware are more of mid-single digit growth categories, while appliances is double digit. Would that, assumption change, given what is happened in last 3-4 months or what we are currently seeing?
It will change not because what has happened in the last 3-4 months, because we have launched new products which have got very good traction in the market. So we've got good gains.
Thank you. Mr. Lohari, request you to join the queue for any follow-up as you have several participants waiting for their turn. Thank you. We'll move to the next question. That is from the line of Simran Bhatia from SMC Global Securities Limited. Please go ahead.
Yeah, thank you for giving me the opportunity. And first of all, congrats to your management for posting such an excellent result. Sir, there are 2-3 questions which I want to ask. First of all, is TTK Prestige is taking any advantage from this PLI scheme which is announced by the government few months back? And secondly, I want to understand what's your percentage of the total revenue from the non-South India, and third, what is the percentage of the e-commerce in the total revenue, if you can give some figure? And
sir, do you know what the PLI scheme is?
The PLI scheme doesn't apply to our category. It doesn't apply to pressure cookers and cookware or kitchen appliances. Okay. It is largely related to pharma and other sectors.
And in electronics. Yeah.
Okay. And sir, what's your percentage of your total revenue from the non-South of the country? If you can give some, if you can.
Right now at about 48-52 kind of thing, South, non-South.
It moves between 48 to 52 depending upon the quarters.
Yeah.
Okay. And sir, third will be percentage of the e-commerce in the total revenue. It is approximately 16%, if I'm not wrong.
Yes, around that. Yes.
Okay. And sir, my last question is means what's the succession planning in the company going on in the future? Are you looking forward to something like that?
There is a robust plan always there. You can see our annual report this year. We will give much more details there.
Sure, sir. Done. Thank you, sir. Thank you. And all the best for the future. Thank you.
Thank you.
Thank you. The next question is from the line of Kunal Sheth from B&K Securities. Please go ahead.
Thank you for the opportunity, sir, and congratulations on a really good set of numbers. Sir, my first question is if you can give us some sense on what would be the 9-month growth in each of our categories, and what would be our market share currently versus last year?
Can you come back with the question? I didn't understand. What is the growth?
9-month market growth for the cookware and appliances categories that we are in, and what would be our market share in each of these segments versus last year?
It's difficult to give you actual category growth because of the COVID. It is difficult to estimate these, and so we don't have those numbers. Neither do we have the latest market share numbers because they haven't yet come in for 3 quarters. I can tell you for the up to Q2 we have gained share significantly.
Okay. So, yes, basically what I wanted to understand is that this large part of the growth, is it, market share, as you're saying you've gained significant market share, do you think, this will be sticky, or once this supply disruption and unorganized part of the business comes back, part of it might not sustain?
Our gain in market share happens when we have innovative products, and which is exactly how we gain market share, and that is sticky.
Okay. And sir, could you give us some sense on the export side of the business? Are we seeing increased inquiries, and because we are targeting very ambitious 500 crore from export, so how are things shaping up there?
Shaping up very well. We have grown quite significantly in the first 9 months of this year.
Actually, we would have grown more, but we are not able to get containers.
But are we seeing increased inquiries for exports, sir?
Yes.
Steep.
And sir, my last question is, we are in appliances segment, we almost now 1,000 crores worth of revenue on an annual basis. So, what is the kind of growth that we can assume for sustainably for the next 5 years? Is a 15% CAGR possible in this category?
Well, that's what we would like to achieve.
Okay. Thank you so much, and best of luck for future quarters.
Thank you.
Thank you. The next question is from the line of Naveen Trivedi from HDFC Securities. Please go ahead.
Yeah, hi, good afternoon, everyone, and congrats to the team for strong numbers. Sir, is it possible for you to share the what sort of price hike you have taken in the third quarter, or any sort of price hike in Jan also?
So we've taken on a weighted average basis close to 9% price hikes in the third quarter. That was over 2 tranches in some categories, and I don't see any price hikes happening in Q4 because we're quite happy with the prices we're getting.
Fair point. And any sort of channel inventory level, because lots of cities and metros we have seen a gradual revival in the 3Q. So what sort of channel inventory you have seen?
Channel inventories are at normal levels of under a month because we haven't been supplying to that extent also. So they're very comfortable, which is why our receivables are also very comfortable. All of that is in good shape.
Fair point. And when you also talked about that 20% sort of a growth in Jan, so that this growth basically, like you also talked about, the categories are also improving. So it can be a combination of both your market share gain and the categories are also improving. So are you seeing the thesis which you were talking about, the work from home and the convenience where people are spending money? So that will even that thesis will be there even in the near to medium term time frame?
I think so, because people now also, please remember that they have been saving money on other avenues, and they have been spending money on the home and home improvement and kitchen improvement. So I think this trend should continue for a while as we go along.
And work from home is here to stay. All big companies have now decided that the last part of their staff will work from home.
Fair point. And just lastly, also like your gross margin on a YOY basis is down, but are you seeing any sort of premiumization in your categories? Because if I look at your new launches, they all are in the premium segment, and you are seeing that you are seeing a good traction for even new launches side. So that way, are you seeing a broader level premiumization in your categories?
So where did you get this gross margin is down from?
Yeah, exactly. Where did you get that information from?
Because my material cost as a percentage of sale is roughly the same as last year Q3, and it is better than Q2.
No, I'm saying on a YOY basis, your margin is slightly down by around 30 bips at a gross margin level.
58.21 to 58.5. That's a difference between product or channel. It's nothing in that sense.
Yeah, so that's what I'm asking. That is the premiumization trend in your categories are like. So that's what I'm more curious to know about the premiumization trend rather than only looking at the margin.
The margin is not because of premiumization. If I sell more mixies, the margin will come down. If I sell more cookware, margin goes up. It's all a matter of product. If I sell more to e-commerce, margin will come down. If I sell more to the retail trade, margin will go up.
So the product channel mix does have a big say, and I think this is quite stable. We have a very widely segmented brand across our categories, and we operate in a wide segment of brand price points. So I don't see any problem there. It's quite stable.
Yeah, fair point, sir. Thank you so much and all the best, sir. Thank you.
Yeah.
Thank you. The next question is from the line of Manish Podar from Nippon India AIF. Please go ahead.
Yeah, sir. Congrats on a great set of numbers. So, just wanted to understand. So, let's say in 4Q, would it be a fair assumption that this 200 crore revenue run rate which you're having on a monthly basis should easily sustain, given that there can be some sort of channel filling which can also happen at the year end?
We ensure that we do not fill the channels the way others do. And I don't think that we would like to give a guidance on whether this 200 will continue at this point in time.
Online channel is consistently doing about 100 crore sales on a quarterly basis. So, any sort of data which you all are collecting just to understand, is this sales to, completely new set of customers, or are these just existing customers buying through another channel?
Sorry, come again with that question.
I'm trying to understand. Let's say now online, you all are doing about 100 crores of sales on a quarter basis for the last 2 quarters easily. So what I'm trying to understand is, are these new customers altogether for TTK, or these are existing customers just buying through another channel in the interim?
It will be a mix of both.
We don't have the data.
Okay, fine, great. Thank you so much.
Thank you. The next question is from the line of Prashant Koti from Sundaram Mutual Fund. Please go ahead.
Thank you for the opportunity, sir, and congrats on a good set of numbers. The first question is on the margin. Apologies if this was answered before. You always highlighted that you would not want to cut back on your expenses or on your employee spends. But this time we've actually seen one of the best EBITDA margins in the last for a very long period of time. How much of it do you think would be sustainable going forward?
That all depends upon the growth. If the growth, market growth is very good, then we will sustain the margins.
Okay, sure. Got your point, but what I'm trying to understand is, are we trying to say that if you kind of are we more confident of getting a 20% kind of a growth rate now, looking at the overall market scenario? Because if that is the case, then you are obviously looking at a higher margin structure as well.
That is true. If we get the 20%, we are looking at higher margin structure. That is true.
Okay, but is the market growth moving towards the direction? Because while
this quarter will certainly be 20%.
No, I'm asking on the market growth. Is the overall market itself growing at such a high rate?
Yeah, as I said, it's difficult to say. I mean, every time we've said it's pent-up demand or it is this or it is that. I think we're taking it as it comes. The brand is strong. As I said, we did not reduce expenditure on advertising. We wanted to make sure that the brand was as strong as ever. We've been feeding all channels so that we are available wherever the customer goes. That's been the philosophy. And if the market is growing, we will get that growth or better.
Any channel where maybe growth is still not up to your standards or where you probably would want to catch up?
So the large format stores, some of them haven't yet come back fully. For example, Future Retail used to be our big customer. You know where it is. So there is some of these things, but Future Retail, some of that sale has been compensated with the other large format stores. So those are some things that wouldn't have come back fully.
And the rural market has not yet come back fully.
And some of the MFI sales hasn't come back fully.
Yeah. Okay, the MFI sales have not yet come back fully.
No.
Sure. And last point, sir, is on the supply chain. You used to highlight about that in the past. How is that situation at this point of time as far as supply chain is concerned?
Now it is quite stable.
So we've not been facing challenges in that.
Yeah.
Yes. Thank you very much and all the very best.
Thank you. The next question is from the line of Sanjay Satpathy from Ampersand Capital. Please go ahead.
Thanks, sir. Congratulations on a good set of numbers. Two things just wanted to know that for last 5-6 years, we have seen that while you have always aspired for this 15-20% kind of growth annually, it has been pretty volatile. I don't know whether that volatility is going to go away or not. But is there any way that your product range will be so better that volatility will be far lesser going ahead?
Well, the volatility has got nothing to do exactly with the product range. And if anybody can predict this, then we must go to him as an astrologer. I mean, whether it is Apple or Ford Motors or Toyota or Samsung, nobody can predict volatility.
No, I'm not talking about that.
We can ensure that our pipeline of innovation is full. We can ensure that our distribution is maximized. We can ensure that our brand is built to its level. We can ensure continuously investing in that brand. Beyond that, if there are market factors which are beyond our control, there will be volatility. And what can be volatile, I don't think anybody can predict.
And COVID, for instance. COVID destroyed the market for 3 months.
So my other question relating to that is is there any big product gap or some category that you are really targeting going ahead? And my last question will be on this China sourcing shift that you are doing. Is that happening at similar cost or not?
Well, the last question and answer, it is similar cost.
Yeah. Okay. And the product pipeline we can't disclose obviously for competitive reasons. Okay. But I can tell you we are working on several new products.
Okay. So essentially the costing is not really an issue. It is just a matter of making it available in the right quantity. That is what this China strategy is all about. Okay. Correct. Great. Thanks a lot, sir.
Thank you. The next question is from the line of Nirav Vasa from Anand Rathi. Please go ahead.
Hello, sir, and thank you very much for the opportunity. So my question pertains to the price hikes that we have taken. So you informed that you have taken a price hike of around 9% in 2 tranches. So would it be possible for you to bifurcate this price hikes into categories like pressure cookers and kitchenware, those kind of segmentations? Would you be willing to share?
We've taken in pressure cookers and cookware, we've taken price hikes of 5%. In some electrical appliances like mixer grinders, it's as high as 20%. In gas stoves, it's about 12%. So on and so forth. Really? It's a cost-based increase.
Get your point. So effectively, you're trying to say is that the entire cost has been passed on, entire commodity inflation has been passed on to the channel partners. Am I right?
So far, yes. Yes.
Great, sir. Thank you very much.
Thank you. The next question is from the line of Kondinya from JM Financial. Please go ahead.
Yes, sir. Thanks for the opportunity. Sir, just a couple of questions. So firstly, on the rural and the modern format retail side, so just want to understand, a few quarters back we had problems, on the rural side and also the modern retail format side. So can you speak a little bit about what we have done exactly to diversify our channel and what's the current status on what is the revenue mix from these channels?
So in terms of large formats, we've obviously broad-based the number of accounts we are handling, which has happened. So, but some of that sale which is lost in the first 2 quarters because the stores were not open is lost. The same is the case with the MFI-based business because there was a moratorium and you know that collections weren't happening, and only after the moratorium was lifted did they start lending again. And only after they lend will the MFI-based business come to us. Now that business has started now, and it is coming up. It's getting to be a stable business as we are speaking. But there's no growth yet. So we are still at about 60-70% of the overall pre-COVID level of MFI business that is there. And that also has moved from one category to the other, so on and so forth. Even there, what we are doing is trying to get more accounts so that we can come back to the same pre-COVID levels of the rural MFI sales.
Sir, and the press release you did say that the direct retail channel is doing really well. So you mean the other channel other than the MFI distribution, right?
Yeah, the other channels. Sorry, come again. What is the last bit?
So in the press release you did mention that the direct retail channel is recovering well. So
yes.
So is it a case where the MFI is lagging behind, but the rural channel has recovered completely?
Yes, the regular rural channel through our general trade has come back into a good rhythm.
Okay. Sir, my second question is a little bit on the market share. So if we were to compare ourselves with the other listed players in the cookers and cookware, since Q3FY21 we are a little bit lagged behind them, and of course we did well in the current quarter. So what is it that we are doing differently currently to grab the lost market share over here?
We launched a new product.
Sorry, sir. Please go ahead, sir.
We launched new products in the segment, which has received very good response.
And you believe that traction would sustain going ahead, sir?
Yes.
Understood. Sir, if we can ask one last question, going ahead, in the existing categories that we are there, are there any specific product categories where you think we are doing really well, and specific categories where we are lagging behind? And if yes, what is the strategy in these categories? And can you speak a little bit about the new categories that we enter as well?
So we're doing extremely well in pressure cookers and cookware and gas stoves. We're doing very well in some more electrical appliances like mixer grinders in the open market.
Induction cooktops.
And we're doing exceedingly well in induction cooktops. So these are things that we're doing very well. Can we do better? Yes, we could do better in kitchen hoods, for example. We would like to do better. We would like to do better in some more categories like rice cookers, but there our supply chain was disrupted. So that is why this has happened.
Okay. Sir, if I were to ask you to pick 2 or 3 product categories which are going to the growth drivers for us going, say, in the next 5 years, what would that be?
I wouldn't want to tell you.
Thank you. Kundinya, request you to join the queue for any follow-up. Thank you. The next question is from the line of Gagan Tureja from Kotak Bank. Please go ahead.
Yeah, am I audible?
Yeah.
You are, sir. Please go ahead.
Yeah. So first question is around working capital in the e-commerce channel. Is it similar to the aggregate working capital or different?
It's similar.
So second question, Stovecraft's RHP, had Frost & Sullivan and Euromonitor data, more or less, covered all the categories you are present in, and they seem to have given a five-year, category growth rate varying between 8 to 10% on an average. Do you concur with, with that assessment of category growth rates in your element categories?
I'd like to think it'll be better than that.
Okay. And since you aspire to, north of that, probably 15% odd, that figure and aspiration is well taken, but, what would drive that? If you could give some idea of how you want to actualize that aspiration?
As I said, do the basics right. Get the innovative products in, build your brand, get the distribution at the right place, and make sure that the customer is on your side.
Okay. And the new products that you indicated, have contributed to growth in this quarter. If you could give the addressable market size of those products and some relevant competition, if you could give it on this. Sorry, come again. What was the question? You indicated that you've launched new products which has helped growth in this quarter. If you could give some idea of the addressable market size of these products.
So we launched some new casseroles, as I said, which was thermoware casseroles in stainless steel. We believe that that's a reasonably good market which can give us about 30-40 crores of turnover in a year. In the next 6 or 8 months, we should be at that kind of run rate. And then we've launched new stainless steel cookware, which is a larger market. And the addressable market there could be 200-300 crores.
Okay. And I think earlier in the year, you also, entered the dishwashers category, and you also started out a distribution outlet in Bangalore for chimneys and built-in hobs and dishwashers. If you could give some idea of how, those categories are panning out for you.
So these are new store formats, where we've tried our hand at seeing how we can premiumize prestige through high-end appliances, through specific stores like this, in this format. It's work in progress. It's right now we're just testing the concept out. We've only done it in Bangalore. We have done it only in the last few months. We need some more time to come back on that.
Okay. And Horwood has discontinued its JV. I don't remember the name of the company with whom the JV was. But you indicated, I think, in a press release that it would lead to significant overhead savings. If you could, quantify that number.
Shankar?
Yes, sir. It was causing a dip of close to -3% on our EBITDA level. EBITDA level was dropped to 5% from the earlier 14% because of this particular line. Now we'll get back to for Horwood. So the Horwood EBITDA now is closer to 9%. After this exit, it will be closer to 12% at our Horwood.
Okay, so that's material savings. Finally, the cleaning products category, if you could give us some idea of how it's evolving how the growth has been YTD, and what are your aspirations there?
So cleaning we've done exceedingly well. We've been 70-75% growth YTD. Though I think in the last couple of months it's slowed down a bit. It's coming down to more stable levels. As soon as the lockdown opened, it was a very good unlock category. Going forward, we expect it to give us significant growth from here also, because the base is still small and we are still adding new products there.
Thanks. That's all from my side. I'll join back with you.
Thank you.
Thank you. The next question is from the line of Sanket Goradia from VEC Investments. Please go ahead.
Hello team, congratulations for a great set of numbers. Would it be helpful if you could give us what has been the volume growth category wise? And secondly, you mentioned that some of the new categories have done very well for us. Could you elaborate a little more on that? In which space they lie, and what has really ticked in terms of the product launch? Thank you.
In terms of volume growth, I wouldn't want to give you the exact numbers on growth, but I can tell you they're significantly high in the double digits.
But you have the value growth are in digits.
Yeah. The value growth you are seeing in the gist. So you can see that is given quite clearly there.
Value growth is 24%. Accurate an average price increase of 8-9%. The volume growth should be around 16% on an average basis.
No, even the 9% growth was towards the end of the quarter. So volume could be very, very close to the value growth in terms of. So those numbers are there, indicative there.
Yeah. So yes, you mentioned that some of the volume growth is led by new product launches. Could you speak a little more on what products picked for us this quarter?
So we've launched a Swatch range of pressure cookers, which was not done in this quarter, but we've obviously started getting traction in almost all channels because of that. We've launched new stainless steel cookware. We've launched some new gas stoves and some new mixer grinder models, and a couple of wet grinder models.
And the casseroles.
Sure. Thank you. I'll come back in the queue.
Thank you. The next question is from the line of Ekta Sanghvi from Vallum Capital. Please go ahead.
Thanks for the opportunity. What could you give the number on the contribution of MFI sales to the total revenue currently?
Very small. I think it's between 3 and it's about 4%.
The prevailing before COVID, almost 4% was last year.
This was pre-COVID?
Yeah, it's around 4 to 5% of our total turnover, which was similar to what we had before pre-COVID.
Okay. And so now that your MFI issues have been resolved and it has started picking up again, would you expect, what level can you expect this to go at in the next 2 years?
One sec. We had no issues with MFIs to resolve.
No, sorry. I mean, so you said, right, that it has the MFI channel has just started, and because of the moratorium, there was.
That is correct. No, not issues with us.
No, I'm sorry for the words, but so what level could we expect this to go at in the next 2 years?
That would really depend upon how aggressive they are.
Okay, what we have been talking about direct rural in the past, which we are going through partly through MFI, other channels also. We believe there is a good future in this particular direct rural sale, given that the government is going to spend a lot of money on the rural sector as the budget. So it is going to be one of the growth drivers going forward.
Thank you so much. And currently, sir, what would be the contribution of revenue from urban and rural? Could you give a breakup?
We cannot give you that breakup.
We say direct rural is 5%, balance 95% can go.
Yeah, exactly. And I don't know how much of e-commerce is going into the rural areas, or how much of the tier 4 towns sale is going into the rural areas. I'll never know that.
Okay. Thank you, sir.
Thank you. The next question is from the line of Srinidhi Karlikar from HSBC. Please go ahead.
Yeah, hi. Thanks for the opportunity and congratulations on great set of numbers. So just couple of questions from my end on e-commerce. So you touched that about 16% odd companies' revenue comes from e-commerce channels. So do you get to know which area eventually this product is going, like at least pin code level, or it's just that you're selling it to Amazon or Flipkart and that's the only information that you get?
No. See, we have three ways of selling on the platforms. One is we ourselves as a marketplace account. Second, from our website directly to customer. And the third is through the platform, through their firms. What they sell through their firms, they give us a broad outlook. We will not get an exact outlook. What we get through the marketplace, we again get some details there. But it is safe to say that the smaller towns have grown faster this year than the bigger towns.
Okay. Fair enough, sir. And the second related question, sir, you have a large presence in e-commerce channel. So just wondering, how do you see is the consumer behavior of an online buyer and an offline buyer different? I want to more answer from a two perspective in terms of product buying. Is online more mass affordable product while the offline is more premium? And is the brand loyalty is less of a concern for online buyer compared to offline buyer? If you could answer that.
In fact, I believe that the online buyer and the offline buyer are two same people. It all depends on comfort levels. Today, what is happening is most of the product research is not happening by browsing in the store, in the offline store. That browsing is happening on the platform. If they are happy with the information they have and they don't need to touch and feel, they will buy it on the online platform.
I am buying both online and offline personally.
Exactly. So if you want to see that, no, I need a touch and feel. I won't buy a shoe without seeing whether it fits my foot correctly. Then you're not the kind of guy who will buy online. So, it's all about personal habits. A lot of people buy online and offline depending on the category that we are talking about. So really, I think it's the same customer. And these habits are starting to stick now because COVID has lasted for so long.
My question, if you see reviews and some of the ratings, some of the brand which are quite small on the offline channel, but appears to get a lot of good reviews as well as number of reviews are quite significantly disproportionately higher compared to a national player like TTK. So just I wanted to understand, is a buyer extremely price sensitive on e-commerce? But you would say it's not that way.
No, it depends again on the customer, right? If there's a very price-sensitive customer who doesn't care what the product is and he says, I'll buy it as long as it's functionally okay, then that person will go there.
See, the reviews also keep changing.
And you and I both know how reviews are managed.
Yeah, okay. So not much to read into it. Fair enough, sir. Thank you for answering my question and all the very best.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to the management for their closing remarks. Thank you, and over to you.
Ladies and gentlemen, thank you very much for the keen interest shown in the company. We've genuinely had a good quarter. We're seeing good trends going forward. The brand is strong, and we've got many new products coming forward. So hopefully we'll keep up the good work as we've done in the last few quarters. Thank you so much.
Thank you.
Thank you very much. Ladies and gentlemen, on behalf of Ambit Capital, that concludes today's call. Thank you all for joining us, and you may now disconnect your lines. Thank you.